We've got, I guess, a mini task force here. We got Rick Santelli, who knows all things futures, and I want to talk to him about just some of the articles we're seeing written. Jack Peruggin's here as well, and Anthony Grisanti is also here. Let me start with you, Anthony. You're with GRZ Energy. Now the story being written again and again is that it's not a bubble and that it's not speculators. And that's Paulson's take, Hank Paulson last week. Is that your take, too?
Well, there's some speculation involved in this market. There always is. But no, I don't think it's a bubble at all. I think that if the things were reversed, say if China's economy and India's economy were only growing by 2 or 3%, or the dollar was back to 110, then you would see the speculators start to sell this market. But there are real reasons why we are up at these levels. And demand from China and India is one of them. There's a bunch of other reasons, too. But, demand is number one. And demand has been very strong, even at these numbers. So it's justified why we're up here.
Does that make sense to you, Rick? I mean, is that the bottom line?
I'm telling you what, Joe, you want to make some history here?
Yeah.
Okay. It's pretty much impossible that speculators are causing the increase in energy. And anybody who's studied or even put in this much effort to look at how futures price would know. It's a physical delivery, Joe. So for 29 and a half days every month of an expiration cycle, you can speculate. But in that last day, it's all about the producers, the people who really want the oil, and there are no speculative forces on the last day. If there were, then the people that are processing our oil, our refiners, are pretty stupid. Because if you're telling me that oil should be at $90, and on the last day, the expiration day, it's at 127, then shame on them for not lowering their bids, because there is no speculation in a physical delivery contract on the last day.
How about this, Rick? Because if it's not speculators, just because it's not speculators doesn't mean that there
29 and a half days it can be,
right.
But on that last...
I got you.
Right.
But just because it's not speculators doesn't mean the commodities can't move to bubble territory, does it?
Oh, no. I mean, there can be a demand-driven refinery type cycle going on where somehow this stuff is overpriced, but the people that are taking control of that contract, truly, if there was that much of a speculative bubble, there's a lot of money that some of these guys are leaving on the table.
How did the Hunt brothers and other guys...
Because, the one missing ingredient is that you have to be able to hoard. If you can hoard, you can manipulate even a physical delivery. But if the assumption is speculators have a big presence in oil, then I defy you to show me where the hell they're hiding all the tankers.
Okay. We have had people say that they're hiding some in tankers.
Oh, come on. You know what? And it's also a constant commodity. Unlike grains where you're cycling at every crop maturity, this oil's coming out of the ground every second of every day. If they're hoarding, there has to be a line of tankers they're hiding somewhere in my backyard.
All right, Perugin, can you stay positive about equities if we go to 150 to 200 and stay there?
No. You know what? We can't. And the reason is it depends how quickly we get up there. If you're going up there as fast as we've been going up, then, it's exactly what a big fund manager who's as bullish as they come said to me last week. Hey, when the circus comes to town, I like to watch. That's exactly what this is. And, Rick, you're wrong. You can't speculate. It's not in the futures. It's with ETFs. They're hoarding Wait, let me finish. Rick, let me finish. Ever since that ETF contract came up, you have seen people hoarding that contract, and that's what they're doing. That's what's driving up the price of oil. People don't realize it.
You can say anything you want, Jack, and that's all true. ETFs do distort prices, but no matter how distorted they are, when the NYMEX crude contract expires, there's real oil and there's only real buyers, and they should put that price in line, and I defy somebody to tell me that they can't.
I wish that was the way it was. Unfortunately, there is a disconnect right now. You've got an IOU market, interest rates, oil, and uncertainty caused by that.
For this exact reason. Why do oil ETFs price wrong? Because they can't hoard the back months. That's why they're distorted. The very argument of why speculators in a non-hoarding process can't manipulate prices other than outside of the delivery day.
Anthony, can you listening to this?
Yeah.
Well, What, you got any comments?
Well, I'm kind of in Rick's camp, obviously. I mean, I think that at the end of the day, this is a physical commodity. The ETFs are based on this commodity, on the physical thing. And somebody is out there paying $130, $135 a barrel. So if somebody's paying the price for it, the reality is that's where it is.
Jack?
But it's happening through the ETF market, not through the futures market. So when people are looking for a culprit, start looking over at that SEC-regulated marketplace and not at the CFTC-regulated marketplace out in New York. That's one thing that we need to bring to people's attention. The other thing is, and you were asking me if there's anything positive that can come in it, well, you know, the reality is that you are getting a demand from a global growth story still intact, and that's what's ultimately going to drive those corporate profits, especially those that have been smart enough to diversify globally.
How about the dollar, Rick? Can we put, if we put in a low?
You know, I'm still looking at the charts, respecting the lows that we put in the dollar index on April 22nd. But you have to remember, Joe, that in a pure market, you can draw better conclusions. The dollar's being buffeted by so many various areas of the marketplace, not the least of which is crude oil is a tail wagging the dog. As it moves higher, the inflation expectations that the Fed is losing control of are very dollar bearish. But that low is still holding, and until we get a one weekly close under 70 in the dollar index, I'm going to stick with that.
Bill, you heard, you're not a futures expert, I guess, are you?
No, I'm not.
Is Rick right?
It's hard to know who's right at this point. All I know is that $150 oil, our company's not structured to handle that, and I don't think the economy is. So whatever happens between now and the end of the year, it's going to be, as I said, the circus comes to town. It's going to be interesting to watch.
So, Barujan, can the unthinkable happen?
Which is what? The unthinkable is the market going up with oil still at $150 and $200? Is that the unthinkable?
Oil goes to 150 and stays there. And then the airline industry, I don't know how many of those guys survive. I think it would have ripples through just about every industry. I can't see people going on vacation, staying in hotels, going to theme parks. Just connect all the dots. What if it goes to 200?
We're going to see a change. You're going to see a change in demand. It's it can't be this way. Ultimately, this type of parabolic move in a commodity forces a change in habits, in demand, in supply across the board.
How about that, Rick? Is that true? Eventually you will see the supply-demand change based on what's happening?
Well, I think you will, but I also think that it's not so much about the habits. Some of us soccer parents, there's certain things driving the work you can't change. But if you look up north to Alberta and various parts of the world that have things like shale, these prices sooner or later will bring in more supply and more technology. There's always a light at the end of the tunnel. And Jack's also right. Commodities, no matter if it's energy or gold or silver, at the end of the day, when they go parabolic, they have corrections. It doesn't mean oil won't be higher 2 years from now, but there will be a correction.
And Anthony, anybody that's bought oil, having traded some commodities in the past, it's so easy to lose your shirt. It's been the easiest trade to just go long and stay long. Is it that easy to make, 10 times your money?
Well, just look at the gold contract.
No, I'm talking to Anthony. Is that possible, Anthony?
Well, it is possible, yeah, but this hasn't been a straight-up move. It might look like it on a chart or things like that, but when you trade it during the day or during the weeks, you see $5, $10 moves down to the downside, then it rallies $12, then it's off $5. So the market's been very volatile at these levels, so it hasn't been a straight-up move. I've seen a lot of people get hurt. I've seen people get hurt trying to pick tops here. So, it hasn't been straight up, and it's not that we're printing money down here, because that's certainly not the case.
Yeah, you need to say that.
You're printing some. Hopefully you're printing some. If not, we got a big problem.
I haven't seen a $10, it's been a while since we had a $10 pullback.
Yes, it has. It's been about 2 months.
Yeah. All right. Thank you, guys.